Hi students, welcome to the video on management accounting fund flow statement. In the previous videos, we have discussed regarding fund flow statements and how to prepare the funds from operation out of adjusted profit and loss account, then schedule of changes in working capital out of increase decrease in current assets and current liability, then fund flow statement, that is sources and application of funds. So fund flow statement is an additional statement which is prepared taking into account the assets, liability and capital between two dates of balance sheets. So it is also known as statement of changes in capital, statement of sources and application of funds, or also where got and where spent statement. So we have given one problem, we have to solve it. So prepare fund flow statement, that means prepare fund flow operation, schedule of changes in working capital and fund flow statement from the following balance sheet of two dates of ABC Limited. One is 31st March 2022 given, another 31st March 2023. So here on the liability side, equity share capital was opening 2 lakh and closed 4 lakh. That is 2 lakh additional issue of equity share, which is known as sources of funds because the funds comes to the company. Then general ledger opening was 30,000. Then 50,000 is the closing. That means 20,000 will be transferred from profit and loss account. The retained earning means it is net profit surplus of income over expenses. That is beginning was 75,000, closing was 95,000. So net profit is to the extent of 20,000, which will be the base for preparation of funds from operation, that is adjusted profit and loss account. 10% debenture was 1 lakh, closing 1 lakh 50,000. So additional 50,000 is issue of debenture by the company, which is known as sources of funds for the company. Then short-term loan, accounts payable, bills payable, these are current liabilities. In case of short-term loan, so 50,000 was the beginning, at the end it is 90,000. So that is additional raise of short-term loan to the extent of 40,000. Already we discussed working capital means excess of current assets over current liability. If there is increase in current asset, that means increase in working capital. Decrease in current asset, decrease in working capital. And reverse is the case in case of increase, decrease in current liability. Increase in current liability means there is decrease in working capital. Decrease in current liability means there is increase in working capital. That is required for preparation of schedule of changes in working capital. Here provision for taxation adjustment is given, so it is non-current. We will prepare the ledger accounts to know how much tax will be paid by the company, how much is the provision made by the company. Similarly, proper dividend we consider the opening balance 30,000 as payment of this year, another 25,000 closing we will keep provision for profit and loss account. So regarding proposed dividend, the proposed dividend is the dividend declared by the company in its board of director meeting. Once the board of director meeting, the company decides to give dividend to the shareholders, then it must be confirmed in the general body meeting by all the members. Then till date it is kept as provision. So 30,000 was the provision at the beginning, Then during this period, the company made payment of 30,000. So another 25,000 the closing, it will be transferred or adjusted from adjusted profit and loss account. The land and building opening was 1 lakh, closing 3,70,000. So 2,70,000 is additional purchase of land and building, which is application of funds, because when we purchase the fixed asset, definitely our funds will be out of the business. Then plant and machinery opening was 1,50,000, closing 3 lakhs. Then there is an adjustment regarding depreciation plant and machinery. So depreciation on plant and machinery, journal entry is depreciation on plant and machinery account debited to machinery account, because depreciation is nominal account. The rule is increase in expenses, losses should be debited. So we will debit the depreciation account. There is a decrease in the asset, increase in asset should be debited, decrease in asset should be credited. So plant and machinery will be credited. Then inventory, it is our current asset, it was 50,000 beginning, at the end it is 75,000. So there is additional 25,000 increase in inventory, which is known as increase in working capital. Accounts receivable was 75,000, at the end it is 50,000. So 25,000 the reduction of account receivable, that is decrease in working capital. Cash was at the beginning 75,000 and 25,000. So 50,000 is decrease in working capital. Prepaid expenses are 25,000, at the end it is 35,000. So 10,000 is increase in working capital. The underwriting commission was 40,000 at the beginning, at the end it is 20,000. So there is written of amount of underwriting commission to profit and loss account to the extent of 20,000. So discount on debenture was 15,000, at the end it is 10,000, means 5,000 the discount on debenture written off. Then first we will prepare provision for taxes on ledger. So provision for taxation. So this is liability. So we will prepare like this. Left hand side debit side, right hand side credit side. So credit balance means by balance brought down. So by balance brought down. This is opening 40,000, then closing to balance carried down. So closing is 50,000 carried down. Then tax paid is to bank, payment of tax, it is 45,000. So debit side total is 95,000. So difference 55,000 will be adjusted or charged to profit and loss account, adjusted profit and loss account. That is 55,000. Similarly, we will prepare provision for proposed dividend. In proposed dividend, this is also similar case. By balance brought down, right? It is amount is 30,000. So whatever the beginning balance, we will make the payment to bank also 30,000. So at the end, the closing is 25,000 to balance carried down 25,000. So difference amount is here 55,000. So difference will be from adjusted profit loss account. It is 25,000. Then we will prepare one plant and machinery account. So on plant and machinery account, opening was, it is assets, so debit balance. So debit side right to balance brought down. This is 1,50,000 and credit balance is 3 lakh by balance carried down 3 lakhs. So depreciation account debited to plant and machinery, that means plant and machinery credited by depreciation. So this is 37,500. When it is 37,500, total is 3,37,500. So credit side A here. So in debit side, we'll write to bank. That is payment or purchase of land and plant and machinery. So it is 1,87,500. Then we will prepare adjusted profit and loss account. So under adjusted profit and loss account, we will consider debit side. It is given return earning, opening balance 75,000. We write by balance brought down 75,000. Then we will prepare first general reserve 20,000. We will adjust to general reserve, that is 20,000. Then here provision for taxation 55,000, right, to provision for taxation, it is 55,000. Then here proposed dividend 28,000 to proposed dividend 25,000. Then 37,500 is depreciation to depreciation 37,500. I already told you how to prepare a adjusted profit and loss account. We got the net profit, that is 95,000 minus 75,000, 20,000. We can write here two net profit 20,000, or opening we write 75,000, closing we write two balance carried down, that is 95,000, that we can write. Then all the non-operating expenses will be added, non-operating income will be subtracted. So we are adding here on the debit side. Then we will consider one by one. Trademark was 45,000, it is 35,000, 10,000 write off. To trademark, retain off, that is 10,000. Then underwriting commission return of 20,000 to underwriting commission 20,000. Then discount on debenture 5,000. To discount on debentures 5,000. So total is, right here, to balance carried down 95,000. So we will get the total. It is 500. $2,67,500. That means here we write 500. That means 1,92,500. 2,67,500. So this is by funds from operation, that is sources of funds, by funds from operation. 1,92,500. So we will prepare funds flow statement of ABC Limited as on 31/3/2023 fund flow statement. So debit side write sources, credit side write applications. So under sources, issue of equity share to the extent of 2 lakh. Then 10% debenture, issue of 10% debenture. It is 50,000. Then funds from operation 1,92,500. Then adjusted profit loss, that is change statement of changes in working capital. Change statement of changes in working capital not prepared. Statement of, that is net changes in working capital. Net decrease in working capital. Net decrease in working capital, that we have to do. Then on the credit side, application. So we have to prepare net changes in working capital by schedule of changes in working capital. So here we will complete first. Then land and building purchase of land and building. It is to the extent of 2,70,000. Then plant and machinery given 1,87,500. So purchase of plant and machinery 1,87,500. Then it is tax, payment of tax 45,000. Then payment of dividend 30,000. So here we have to prepare the schedule of changes in working capital. So before fund flow statement we have to prepare schedule of changes in working capital. So we'll start. That is increase, decrease. Here short-term loans increase. So write short-term loan, that is increase 40,000 and decrease in working capital 40,000. Then accounts payable decrease 10,000 and increase in working capital 10,000. Then bills payable decrease 20,000, decrease 20,000, increase 20,000 means decrease in working capital. Then it is inventory increase 25,000, so increase in working capital 25,000. Then accounts receivable, it is decrease 25,000, that is decrease 25,000. Then cash at bank decrease 50,000 right here. Then another prepaid expenses increase 10,000, so prepaid expenses 10,000 increase. So here it is 1,35,000. Here it is 45,000, so 90,000. 90,000 decrease in net decrease in working capital. So that net decrease in working capital 90,000 we will write in the sources. Then total 500 to 5,32,500. So it should be 5,32,500. That means our preparation of funds flow statement is accurate. Thank you all for watching this video. In the next video, we will prepare some tricky question from funds flow statement and we'll complete that course. Then in the next, I think we'll start, that is assessment of working capital, which is very important, very vital chapter for bankers and commerce students also.